Okay, here we are with chapter 3. Talks about accounting journals. Journal is called a book of original entry. Book of original entry. That means that when you have a particular transaction that relates to a specific journal, this is where you write it down first, and this is where it enters your accounting information and records. So, accounting journals. Here's your learning objective, just one. We're going to talk about special journals, controlling accounts, and subsidiary ledgers. Okay, 3 new terms for you. System principles, well, accounting journals collect and process data from transactions and events and organize them. Again, this is where information enters your accounting system. So increasingly, source documents are electronic files, creating a paperless system. That's kind of where we are right now. So everything is no paper, everything is electronic. I'm going to talk some about special journals, controlling accounts, and subsidiary ledgers, all important parts of your accounting system. Special journals and subsidiary ledgers. Okay, here are your 5 special journals. A sales journal, that is where you record a credit sale. In other words, your customer didn't give you any money, he just gave you a promise that he was going to in the future. Next one is cash receipts, all receipts of cash. The middle one, purchases journal, that's a credit purchase. Next one over, cash payments journal, that's self-explanatory. And then a general journal, which is where you put anything that doesn't fit in your special journals. Subsidiary ledgers is another thing altogether. Subsidiary ledger, you can see on the right hand side, accounts receivable ledger. That's a subsidiary ledger. That means that all of your customers who didn't give you cash are listed there. The transactions that they had with you are listed there in an accounts receivable ledger. Now there's an accounts receivable account in your general ledger. Sorry, we've got a cat walking through our screen there. Amounts due from customers, okay. Everything is due from your customer. Then we have an accounts payable ledger. That's amounts owed to creditors. That's where we're the debtor. The controlling account in your general ledger. Whoops, there's that cat again. Controlling account is in your general ledger, and the subsidiary ledger is an accounts payable ledger, where all of your suppliers, the people that you're buying from on credit, are listed. And all those transactions that you have with your supplier are listed in that subsidiary ledger. So subsidiary ledgers, you can see the definition there on the bottom, are listings of individual accounts that have a common characteristic. Accounts payable and accounts receivable, they make an important statement there toward the bottom of the screen. After you've posted all those or entered all of those in those special journals, the balance in the accounts receivable controlling account, remember that's the account in your general ledger, is equal to the sum of the balances in the accounts receivable subsidiary ledgers. Journalize and post transactions using the sales journal. There it shows you a sales journal, give you an idea of what those entries look like, give you an idea of what those journals, the pages in the journal show you. Okay, we're not going to do any transactions where we use those journals, but you know, this is a really good source of information for a business owner. He wants to know how a particular customer is paying on his accounts receivable. If it's a customer that is not paying on his receivables, he wants to review the transactions for that particular customer. And the source of that information would be a sales journal. Proving the ledgers, well, you're going to make a listing of customers in your subsidiary ledger, accounts receivable subsidiary ledger. You can see a listing of those customers. The balances in their accounts are added together. You can see on the very bottom there, total accounts receivable, $2,150. The balance of the accounts receivable controlling account, now remember, that's in the general ledger, should equal the accounts in the accounts receivable subsidiary ledger. So that's just sort of a way of ensuring accuracy in your accounting records. Sales returns and allowances, that goes in the general journal, just doesn't fit anywhere else. And so we're not going to have a lot of conversation there about that. That's a little bit beyond the scope of this course. It's kind of nice to know that we have a place where we can look for sales returns and allowances, however. Here's cash receipts journal, all receipts of cash. You can see what the pages in that journal would look like. Types of cash receipts you can see over on the right hand side. Cash that you got from credit customers, they're paying down their receivable. Cash from cash sales, of course, and then miscellaneous receipts of cash from other sources. And this just shows a way of ensuring the accuracy of those journals. It's good enough for you to know that we do ensure the accuracy of those postings. We won't get into the actual posting, but just some general information for you. Here's purchases journal. Remember, this is purchases that we are making for credit, has to do with accounts payable. There's your schedule of accounts payable. These are the people that we owe. Down at the bottom there, $1,325, the balance of the accounts payable controlling account in the general ledger should equal the accounts in the accounts payable subsidiary ledger. So just like the schedule of accounts receivable, this ensures the accuracy of our accounting records. Here's some transactions. We're going to take a quick look at those. Again, we're not going to make those entries, but good for you to know what they look like. Learning objective, explain special journals, controlling accounts and subsidiary ledgers. Okay, so this is where, whoops, just a second here. some reason, we've got a flashback there. Let me just go ahead here, get back where we were. We were almost done. Pretty close anyway. Cash payments journal. Let's go back here. We were approving the accounts payable journal. Let's go forward. 19. Looking at cash payments. Oh, there we go. Number 20 just shows you what those transactions would look like in a journal. Again, it's enough for you to know the purpose of the cash payments journal. It's a good source of information for you, so it's there for your use if you need to use it. 21, general journal. This is kind of a catch-all. If it doesn't fit anywhere else, a transaction is recorded in the general journal. You can see that we've got some examples of events or transactions that would be reported in the general journal. Technology-based systems gives us a little conversation about that. Not too important, but kind of interesting. Talks about online versus batch processing. Computer networks. Here we go. Almost done. There we go. End of chapter 3.